Morning all, how are we all doing? How's everybody? Everybody have a good long weekend? Hopefully doing lots of research? Not. I didn't do anything this weekend. Well, I did. But I didn't do anything trading-wise this weekend. It's nice. Have the whole weekend off. No charts. Didn't even look at MetaTrader all weekend. All news. I've no idea what's going on. So we'll look at all that this morning. How are we doing? Morning, John, Kennelly, Steve, Jerry, Berlino. How are we doing? David, Diamond, Virginia, Danny. Right, let's start off with morning Satrio. Let's start off with a quick look at probably Friday and see where everything is. So these are the four accounts running the four main strategies. This is H1 hedging. Friday banked 0.1%, hardly anything. 0.9% negative on drawdown control this morning, 18% in drawdown, 25% banked. So I didn't really do anything on Friday. No, Friday, that was yesterday, wasn't it? Sorry. Yes, 30th yesterday. Yeah, sorry, yeah, because I wasn't here. So yeah, yesterday did nothing much. Banked 0.17 on Friday. H4 mean reversion sitting in 10% drawdown. Banked 1.26% yesterday. Drawdown control on Friday because we had a few squeezes on Friday. 0.28 today. 9.87. US dollar yen is the only thing that's getting really a little bit stretched on that one. US dollar yen. Oh, blimey. There's a double top this morning. They sold that hard, didn't they? So yeah, on that squeeze basically. H1 mean reversion 1.64 banked yesterday, 0.32 banked this morning, 6% drawdown. Nothing in any worry at all there. Mainly in 6% because there's so much New Zealand on at the minute. So nothing to worry about there. ADR reversals 5.5%, 4.44 banked yesterday. Nothing banked today. US dollar yen again, the only thing that's getting a little bit stretched. It's only 1.5%, so it's nothing to worry about. What's H1 doing with US dollar yen? Nothing, hasn't got any on. Okay. So there we go. So 11.3 banked for the month, 21.4, 12% there, and 25% there. So got a lot of drawdown on at the minute on a few of these. So we'll see how we go for tomorrow's the last day of the month. Right, news. Got 5 minutes to the open. So obviously yesterday was bank holiday. Nothing moved yesterday much. Obviously banked quite a bit yesterday. Actually, we did get movement yesterday. It's not really true. We did get some good movement yesterday. So banked a few bits and pieces yesterday, but nothing, it didn't really go anywhere is what I mean. All we did was get sideways. I didn't even see if there's any ADRs. So as I said, didn't look at anything yesterday. Morning, John. Morning, Gable. Morning, Jessica. So news-wise this week, today there's nothing much. We've had we've got the GDP for the Swiss franc at 8 o'clock. That'll be interesting. So that's the open as well. We'll get a big open, I think, today on the DAX, possibly. We've got the CPI for Spain, and then this afternoon we've got consumer confidence at 3 o'clock. That's half an hour after market open. Market might hang around for that. I would suspect not. It's the bank holiday weekend, so what we've got today is a lot of orders backed up from the weekend. So I suspect they probably won't hang around. They'll just go out the gates because there'll be a lot of orders to execute today. So they'll probably just go straight away at the open. Tomorrow we've got low speaking in the morning. We've got the CPI figures, 6.4 expected. So expecting an increase on CPI tomorrow for the Australian dollar. If that comes out as a negative, we'll get a drop in the Aussie. We should be getting a pump according to the forecast tomorrow. So bullish Aussie. That will also be bullish New Zealand. Obviously, we're waiting for some bullish movement on the New Zealand after the drop. So tomorrow might be the day basically get that rally on the New Zealand. They may even do it today. So we'll see. We got the CPI figures for the euro coming out tomorrow as well. Canadian GDP in the afternoon. We have Thursday. It's non-farm because that's, yeah. So I was going to say Thursday, non-farm. because it's bank holiday. Obviously, that's delayed by a day. So it's the unemployment claims and PMIs on Thursday for the US dollar. So that's the biggest day this week. And then obviously we've got the unemployment rate on Friday, forecast to go up. If that doesn't go up, big spike on the US dollar potentially. So that's the news that's forecast for this week. I had a quick scan through. There's not an awful lot this morning that I could see news-wise. Apart from that, that's just come in. Bank of Japan, MOF and FSA officials are to hold an emergency meeting. Okay, so the potentially some movement on the yen. That explains this. I was going to say, that was a hell of a double top. So this is the reaction to that news event. Bullish yen. We're expecting some bullishness on the yen potentially. So when is that? Say, does it? So this is the only news event that came out over the weekend after scanning through this morning that I could see that was of any importance, which is the Bank of Japan, Zoeda. I predict that inflation would begin to fall sharply towards the middle of the financial year 2023, meaning this interest rate increase that they were potentially planning this year possibly won't need to happen if that inflation figure falls sharply. So that you would read as kind of neutral to bearish for the yen. However, obviously there's some kind of emergency meeting going on. So we'll see what happens on that. But apart from that, over the weekend, there wasn't an awful lot else. We had the unemployment rates coming out, dropped as well in Japan. Everything's going the right way in Japan. They're just in dire straits with everything at the minute, but everything's going the right direction. So I suspect we will get some strength coming through on that. Right, so there's that reaction to that news, potentially bullish for the yen. DAX this morning, we've got 2 minutes to the open, 1.5 minutes. DAX, we've got a gap fill to the downside at the moment. Weak it was. Look at that for liquidity yesterday. Dead. Towards the end of the day, that is. But so DAX downside potentials are the gap fill and then yesterday's low. Upside potential, yesterday's high. So all we're looking at the moment is obviously because we didn't do an awful lot of movement yesterday. We just pulled back on that rally from Friday. If we're bullish, it's absolutely sky's the limit up to 200 ADR. So it could go absolutely anywhere in here. There's a potential wick there and a wick there, but difficult to tell. So yesterday's high really is your first potential resistance. Downside, there's lots. So this propulsion gap to the downside potentially is a decent area of support. So we tapped into that multiple times, couldn't get through it and slammed through. So that propulsion gap could act as support on the way back up. Failing that, if that breaks, it's 150 ADR all the way down to last week's low. So plenty of movement in either direction. Market's about to open. I haven't done anything with the new version of the opening range breakout EA. I've no idea what version this is even on here. So let's just see what it does. But it's trading the 5-minute pre-market opening range, which is there. We've got 15 seconds. Morning, Baggy. Morning, Potgator. Okay, so there's the opening range in. There's the orders placed. A bit of a delay that, isn't it? As I see you breach the 2 currency rule, what is your opinion about that? I don't breach the 2 currency rule. Well, I do every now and again, but those the VPSs are just trading every trade so that I can show every trade in here. That's all they're doing. Yeah. Bit of a lackluster open this morning. Is that frozen or is that just stopped? That's frozen. When you're ready. God, there we go. Right. Back to life. So short DAX on the pre-market open. Cancelled off the pending. That's good. So we see where we go. That opening range high is in completely the wrong place as well. That slipped, didn't it? On the right candle, yes, that slipped big style, didn't it? There was a massive delay when that went in. This is the problem with this pre-market. Sometimes your broker is just not going to allow the EA to trigger orders and do calculations in time. It just pauses. That should be there. So in theory, that was an opening range break to the upside, wasn't it? And then it broke back down again. Might be a better run on the 1 minute chart. It's going to be very difficult to backtest it on the 1 minute chart, but it might be better to run it on the 1 minute chart and try and put that range in literally 10 seconds before that candle, before the liquidity hits it. Let's do some testing on that. Okay, so at the moment we've got the gap fill done. So they've basically just completed the gap fill this morning. So we'll see if we rally back down to yesterday's low. That would be the obvious spot if we're going to do a fake out this morning, just to find some limits trigger down there and push back up again. GJ outlook, still bullish short term, long term? Right now, yeah. Later on, don't know. Depends what happens with the yen. Pound is bullish though. Morning, Amy. Bank of Japan meeting at 5:30 GMT today, is it? Right, okay. Morning, John. Right. Okay, so the Bank of Japan meeting is later today. All Australian ADR extended. No, just one. Aussie US is extended. We'll have a look at the ADRs in a minute. And the RSIs, not a lot to look at there, to be honest. So we'll have a look at those in a bit. Okay, so DAX is still running south at the minute. David, I'm testing an aggressive ORB strategy using the pre-market 5-minute range, but using only 50% of the range and aiming for a 1.5 return. First move this morning was successful. Cool. Any scalp will work at the open if the market goes. This is the thing with this, you know, this pre-market range, all the back testing that I've done has proven that it really doesn't matter what you use as a trailing stop, what you use as a target specifically, or what you use as a stop loss. The parameters that don't make any difference are stop loss and trailing stop loss. Yeah, there you go, TP hit. Because the way this strategy works is either it goes or it doesn't. That's it. Where your stop is placed has got nothing to do with it. It's whether or not they go or not, and that is totally out of our control. The whole this strategy. So if you used a 50% stop or 100% stop of the opening range, it's either going or it's not going. If it's not going, you're going to get stopped out at 50%, whereas I get stopped out at 100 most of the time. Obviously, there's going to be differences in statistics on it, but this is the edge in the strategy: an opening range break and run. That's it. It's a breakout strategy, breakout trend strategy. Just coming up to limit orders at the lows of yesterday. So yeah, if that works, cool. Obviously, both EAs will do that. The current opening range breakout EA will do it. The new one will have the option to test different stops as well. So we're break even on the on that second entry. So either we're going to get the $750 win or the $3,250 win, one or the other. So that weekly low, last week's low, looks like the last week's, what the hell's that? That's not any line. That's a line I've put in, isn't it? Oh no, it's 2-week low. So that's the, oh yeah, sorry, it's this level here, look, which is the previous support, turn, resistance, potentially turn, support again. Okay. So just pulling back at the moment. So probably going to stop out break even on the second part of the trade. We'll have a look at that in a minute. Have a look at the FX pairs. That's basically they're buying up these lows at the minute. So we'll see if we get a propulsion gap there. The second leg down. Thank you, Dax. Steve, good. Excellent. Morning, Anna. Red is the day. Is it? Day's not over yet. Morning, Frank. Right, ADRs. So there's only one ADR to look at today, Aussie dollar, US dollar. That's the only thing we've got extended at the moment. So that one basically had a little push up, big drop, ADR hit and bounce. It's already gone, missed it. So you're either in it now or you're not. So there you go. That's the only ADR we've got today. Already in that one at the moment on an H1 RSI extension from there. So push down, continuous push down. So these Aussies basically, we'll have a look at all these Aussies and New Zealands in a minute because they're all stretched. So we had that big reaction on the New Zealand dollar interest rate increase, which should have been bullish or at least neutral. And they had a massive negative reaction to it because they overpriced it. So we're expecting some kind of pullback to start. We've gone into like 3 days sideways now on this Aussie US. So you've got an ADR hit on that today, which is again a higher high, so a higher low rather. So you've got your low there, your high, higher low, higher high, higher low. Looking for a higher high basically. So if market structure is going to hold, we should be looking for a new leg up. Propulsion gaps galore to the upside. This support here is probably the most obvious spot if we're going to continue on the way down for a bounce. So, yeah, looks good for longs. So ADR reversal this morning. The EA would have got into that on the ADRs. What's the US? There we go. That's in profit, 0.8%, 0.08% even. Yeah, so already long on that one. So that's your only hit there. Your weeklies, obviously there's nothing. It's Tuesday. We didn't get enough movement yesterday to get any hits on the weekly ranges. Your monthly ranges, obviously tomorrow is the last day of the month. So these ones have kind of, we are still stuck in some of these. So, but as you can see, it's only hit 100% of the monthly ranges. We haven't had any extensions beyond normal monthly ranges at the moment. So Aussie, New Zealand is one there. Still extended to the upside. But I think the extension is actually the downside, wasn't it? What was the extension on that? 283. Yeah. So that was your extension there. That, you know, that was one that played out ages ago. But I've got a feeling we're probably, yeah, we've pretty much done the monthly range. So we've done the monthly range hit to the low, and then we've done the monthly range back up to the high. So it's done 200% of its average monthly range. It's just done 100% to the downside, 100% back to the upside. Obviously, we're looking for shorts on everything against New Zealand. Euro CAD and Euro New Zealand and New Zealand CAD. So Euro CAD still extended to the downside, loads of upside targets. Euro New Zealand, again, that's done pretty much the same thing. So we got a hit to the downside, then we got a hit back up to the upside, and the New Zealand dollar CAD. So that is still extended, massively extended. So 2 positions on that on the H1, M5. Average is there. Target is back up here in this propulsion move. So this double bottom there, and there's obviously another weekly level there. We've got another level there potentially. So anywhere up here basically, but this is one massive propulsion gap. That whole area there is one propulsion gap because the market gap's there, or the price gap there on Robo Forex. So big push down all the way back up into there, I would expect, which is 225 ADR. Just waiting for some strength on the New Zealand dollar at the minute, which obviously we are still waiting on. It is starting to look a little bit more bullish after this morning's drop. So as soon as you get a reverse alert on the hourly, any one of these reverse alerts on the hourly could be the one that starts that W. You know, so we had one here, look. Yeah, looked like it was going, and then it just went into an accumulation yesterday. But obviously, there's no liquidity yesterday because the markets were shut. So that's what we're looking for. Big, strong push back up to the upside. So that's all your ADRs. DAX has completely retraced all the way back up. Yeah. So there's your 5-minute opening range, which did break to the downside. So if you're on the 5-minute opening range breakout, you are short at the moment. Certainly looking more bearish than bullish at the minute. RSIs, there's not an awful lot to look at on the RSIs either. It's all pretty much the same stuff. It's all New Zealand based still. So Aussie, New Zealand, huge push to the upside. So the 4-hour RSI extension is still there embedded. So we got embedded on the news, on the interest rates. That's where the initial short position was put in on the hourly. Second short went in there. It's pushed up. Nice rejection up here. So this area of this other news event that we had over there somewhere, nice little rejection there. So we'll see. It's going to start to roll over at some point. We're just waiting to see when. So that is your target, somewhere back in propulsion. Not necessarily going to come all the way back down again. Might do. But we'll see what happens. So the news catalyst this week for moving that is tomorrow morning. So the Australian dollar and the New Zealand dollar move a lot of the time in tandem, depending on what the news is, whether it's a big result or a little result. We've got low speaking, and then we've got the CPI. So if the CPI figures for the Australian dollar are bigger, there is potential that that might rally the New Zealand dollar alongside with it. So we've got potential tomorrow morning for all of this to unravel. So it could be one of those mornings where you wake up and everything in your P&L is just green, which is lovely. Depending on obviously if you've got New Zealand pairs on. So that's still extended to the upside. We're just waiting for next leg down basically to start, which looking pretty hopeful today. We've got an inside bar going in on the 4-hour. So outside bars are typical reversals. So inside bars and outside bars are indecision in the market. Yeah. So normal candles, obviously you get higher highs, higher lows, lower highs, lower lows. This market structure just pushes price up and down. When you get an inside bar, it means the market couldn't make its mind up whether it wants to go long or short, which usually means whoever was in control previously has lost control. Whether or not they can take control is another matter. Same with an outside bar. The bulls tried to rally. The bears said no, and then they pulled back inside that initial range. So the bulls ran out of steam. The bears have shown signs of strength. So now if we get an inside bar on that, it means there's still no winner, no bull, no bear in charge. If we get a new low put in there by the end of this candle, you've got a lower low and a lower high, which is bearish. So it's looking like we are starting to see a little bit of weakness creeping in on that one. Pound New Zealand. So again, same thing, massively extended, massively embedded, this New Zealand dollar. Same thing here. We've got an inside bar forming at the moment. So indecision, bulls not managed to make any more progress today. 2 positions on the hourly on this. Again, same target, propulsion. New Zealand CAD extended to the downside. Nice wick to the downside there. So we've got some decent New Zealand strength coming in across the board at the moment. This is really good. Finally, obviously it needs to be sustained. We need to actually get some movement. But the problem with a move of this size, this was a 300 ADR move pretty much across the board on the New Zealand dollar. You've got to now think, right, we're back in normal price action now, normal ADR movement. So the normal ADR on this is 77. So for this, from where we are right now, to get all the way back up into this support here is 144 pips. So that's 2 ADR. Obviously, if price stays within its average daily range, which it does 58% of the time, we're going to take at least 3 days or so to get up there, aren't we? It's going to be, this is like possibly a week's worth of movement just to get back up into that area to retest that level there. However, obviously, if there's a news event from the Australians and that drags the New Zealand with it, we could get a 150 ADR. So we just jump the queue and get all the way back up to there pretty much straight away. So we're just waiting for some catalyst to drive the New Zealand at the minute. But it is showing some decent normal strength at the moment, which is good. So that's extended on the 4 hour. We're extended below the 25 level on that one. New Zealand dollar Swiss, same thing, embedded. Beautiful move on that one as well. Weak Swiss franc this morning by the looks of things. Everything pushing against the Swiss franc. So the Swiss franc's really weak today. So New Zealand dollar Swiss, that's having a little bit of a rally. We might see some ADRs today on these. 4 hour reverse alert is just about to go in there off of last week's low. So potentially again, big strong move. Again, 50 ADR is normal on this. Getting back up to there is 138. So you're nearly 3 ADR to unravel all of this. But I would be looking more for this level here, although that is a broker candle. So I would say probably this triple bottom here is your level. An exit. That's that propulsion gap there. But this could well fill this. Yeah. So we could be seeing ourselves come all the way back into the 24.72 and then rally back down from there. Swiss franc should be strong with the euro. So there's no reason why we shouldn't be continuing that downward momentum, that downtrend. Yeah. So, but obviously it needs to pull back first. We've got the monthly low coming up at ADR today. So if the New Zealand does fall over or the Swiss franc does power up for any reason, you've got your monthly low and ADR for a potential reaction point there. There's going to be limit orders sitting down there as well. And New Zealand dollar, US dollar. So again, it's all New Zealand dollar based. 3 positions on this on the H1 M5 strategy. 4 hour, massively extended. Again, just not getting anywhere. But today we are starting to look like we're finding some strength at last. So we'll see if this holds. If this strength holds, obviously, you know, if we get an ADR hit on these New Zealands today, if we look at all the New Zealand pairs on the hourly, so you can see where the averages are. So well within an ADR on those 3 positions. So an ADR hit today out of that one. New Zealand yen, an ADR hit will be out of that. 34, not quite actually. Need to get 125 ADR on that. New Zealand dollar Swiss is 125 ADR. So ADR hit on that just gets us back a little bit closer to the entry. New Zealand CAD is sitting at ADR. Euro New Zealand short is sitting at ADR. Aussie New Zealand is sitting at ADR. So again, you know, this is why dollar averaging and position trading works. When you look at where the positions are, one there and one there. All you're looking for is that one ADR move, that one strength move off of the currency, which you're going to get every week, 2 weeks in a worst case scenario. You're going to get a strength, you're going to get push in a currency because businesses have to transact and there will be a lot of flow through it. Just making sure that you can get yourself out if you need to when that drive happens. So all good. DAX straight back down, new low, straight off of the lows again. Another bounce off of yesterday's low. So straight down into it, bouncing back off of it again. But all market structure is bearish on this. High, low, lower high, lower low, lower high, lower low, lower high, lower low. Looks like it wants to break that level. If it breaks that level, we're going down to weeklies. So you'll be looking at this gap fill, this 2-week high, and then obviously down to ADR, and you're going to find a load of chop in there. So doubt it will get much more beyond ADR today, unless we've got something catastrophic. Right, there we go. There's all your analysis done. That was quick. What do you think about the NAS? Have a look at the NAS this afternoon in the US session. Euro pound has fallen off the table. Oh, yes, it has. So still in a range on the euro pound. Range has just shifted down. So this was the initial range here. We tested it. This looked like a wick off spring, but it didn't get back to the highs. So I'll be looking for a bounce off of last week's low, basically. Pound strength. Euros seems to be a little bit weaker than anticipated. So, but looking for a bounce down there. No entries on this. Haven't had a trade on this since 8th of May. Last trade on this. Way back there. Just been sideways. DAX is still throwing itself around. Yeah, it's not very. It looks bearish though. Looks like a short. So that banked 286. Oh, so we did get that buy on. All right. Okay. Yeah, we did get the buy on the DAX. Market execution. I think with this pre-market strategy, market execution is absolutely critical. You need an ECN and you need a fast execution. Trying to think, there's not enough. There's nothing in the air I can do to speed it up because everything is required that is required on tick. Everything else is on candle, so I can't speed the EA up at all. So you got to get a good broker, or prop firm, basically, because these order executions have to be done very, very quick with that pre-market. How would you characterize the opening candles on the DAX? Lower highs, lower lows, no inside candles. I just done that for Guinea, didn't I? You must be a mind reader. So yeah. So that's your opening range. Yeah. Then you got a lower high, a lower low, a lower high, a lower low, a lower high, a lower low, a lower high. Inside bar, potentially. Obviously, we've got 1.5, well, just under 2 minutes left on this candle, but it's an inside bar indecision. So sellers have lost control. Typical price action. So a lot of people play the inside bar break. So when you get this price action here, assuming this does end up as an inside bar, you can then take one of two entries. This is not going to do it, just to annoy me. But if that was to be the case, for example, and this was actually down here somewhere, you got two entries. You either take the break of the current candle, high or low, and just run with it, or you take a break of the previous candle, high and low, and you go with that breakout. Obviously, the previous candle breakout is the safer one. Euro pound's just touching last week's low. That's the safer entry, but the wider stop. That's the tighter entry, more aggressive entry, and, you know, very high risk reward if it works out. That's basically how you read price action. It's literally, there's only three things that can happen, really. It's either it's bullish, it's bearish, or it's neutral. And a neutral candle is either an outside bar or an inside bar, or it's a higher high, higher low for a bullish, or a lower high, lower low for bearish. That's it. There's only three types of price action. Only three things a candle can tell you. It's bullish, it's bearish, or it's not sure. And then you decide how to play that bullish, bearish, not sure. If you're down at support, as we are here, we're down at yesterday's low, and they've bought up yesterday's low 3 times now. And we are sitting here, and the bears were not able to have a retest of that low. That's bullish. So you would take the break of that inside bar, but it's not an inside bar. So it's not a setup. So this is where most people go wrong. They go, oh, yeah, no, definitely, I'm going to go with that. But that's not really, that is a bullish setup, obviously, now, because it's a higher high and a higher low. So the market has swung back round. So it's literally done that. All it's done this morning is that. Something like that. Oh, yeah, now we've done that, haven't we? Yeah, so bear, bull. That's what the price action toolkit. That's the reason I built the price action toolkit was to trade that exact way that I've just explained, which is what I do when I scalp. All I'm doing is when I see a candlestick pattern like that, I mean that wasn't one, but let's say that this candle here was there and there, I would literally press the buy stop and the sell stop button on the price action toolkit and let it get me in. Whichever way it's going to go, it's going to go. I don't know which way it's going to go, but it's going to break out of an inside bar, because an inside bar is a pause. After a pause comes usually a propulsion move. Okay, Euro pound has just slammed straight through there. Look at this, pound is on the move. Okay, big moves on the pound this morning. So all the pound pairs rallying pretty hard by the looks of things. Swiss franc. Actually, this is not the pound, is it? This is the euro and the Swiss franc collapsing for some reason. So this is the Swiss franc. So there you go. So the euro Swiss tells you which currency is in control. The euro is stronger than the Swiss franc. So this is the Swiss franc falling out of bed, basically. It's not going to help the euro. So Swiss franc across the board being completely destroyed this morning. There we go. So high, low. There's that potential shift, and then you trade it back up into that high. What price action happens at the high? Stop somewhere. Risk reward 1.5 plus. In, out, make money, go and spend it. Sounds easy, doesn't it? It's not easy. Albi, which strategy do you use for prop firm challenges? Opening range breakout, opening range, yes. So I use the opening range breakout. I don't use, I do kind of use the market reverse alert CA. In a slightly different way though. But no, I don't really. I don't. That's a lie. I do use it every now and again, but not really. That's not my strategy. For prop, you've got to either be scalping or you've got to be playing support resistance, really, in my opinion. Just 1.5 R, 2 R support resistance bounces. But I do scale into them. So I have used the market reverse alert CA. But it can get a little bit out of control sometimes, so I prefer to do it manually. But opening range breakout strategy, yeah, especially the pre-market. Pre-market is absolutely killing it at the minute. Hopefully it's going to stay that way, and the back testing shows that it should do. So I will get on with that. Actually, I won't get on with it today. So today, this afternoon, I am planning to do a live room, but I'm going up in a light aircraft at lunchtime for a pleasure flight. So I'm flying at 12. So hopefully I'll be back for 2:20. Flight's an hour, assuming everything goes to plan with the flight, obviously. If I'm not at 2:20 and unplanned, you know why. So I am planning to be here this afternoon, so I'm going to do some more testing. I'm not going to get a chance to do any more development on the new version of the ORB today. It didn't fire quite right on Friday, so I've got a new version which I haven't rolled out onto this server yet, so I need to just try and do that, but I don't think I'll get it done today, unfortunately. Morning, Stevie. What target do you choose for the ADR reversal? Third of an ADR. So the ADR reversal strategy is running at a third of an ADR. So it literally banks after a third of movement. So the reason for that is, if we look at an ADR today, Aussie US, that one's bounced, but it hasn't quite managed to get there yet. So entry on that one would have been there, or was there, is there. So there's your reversal alert off of the ADR. So the idea behind the ADR reversal is it's an intraday scalp strategy, ideally. So there's two things at play when you hit ADR. Either they are reaching for a level often, and they will just fly back in the opposite direction. If that's the case, you're out, no problem. So if you get in and they've reached for a level and they're bouncing and they're going to come back and they're going to make a new high and it's going to go in the opposite direction, it's fine. You doesn't matter what you target, you will always win. If it's a reach in strength in one direction, for example, and we are just going to pull back and then drop, and market structure is going to be like that, i.e. in this case, high, low, lower high, lower low. Yeah. What you want to do is be out as fast as you can. So bear in mind, price moves on average, the average daily range. A pullback, a 50% pullback, yeah, is quite common in market structure. So you push down, you pull back 50%, you push down, and you keep doing that. So if you target a third of its average daily range, by the time you've got into the trade on the reverse alert, and this one was quite a big one actually because that candle was quite large. The theory is obviously if you target a third of an ADR, you're going to hit it if it only does a 50% pullback. Yeah, so it's a scalp. I want to be in, I want to be out, ideally now. If I don't get out now, that's fine. Get me out tomorrow as market structure continues on its way down. So that's why it's a smaller target. If you run the ADR with a much bigger target, obviously all you're doing is you're taking the opinion that we're going to get at least a V-shaped recovery on whatever that ADR move was, which will happen. So yeah, you can get 100% of an ADR out of it. But the times it hits 100% and the times it hits a third of an ADR within a day, much bigger on a third of an ADR. That's the target. Half an ADR is also a good target. So if you wanted to, you could set the EA up to trade half an ADR for you and then watch it and monitor it. So let's say, for example, half an ADR on this is 27. So let's say this was a tight reversal alert and you got into the reversal alert there, not there on that massive candle. That move there was only 20 pips. Yeah, half an ADR is 27. A third of an ADR, though, is 54 divided by 3. 18. Yeah, that's 19 pips. See, so the only reason this trade is still on is because of the size of that. If the reversal alert had been normal and been a much smaller candle, which it normally is, you got the reversal alert there, you'd have been out there, done, literally in, out, scalped. But it's a big, horrible candle today. So to get a third of an ADR on this, 18, needs to get to pretty much where that line is, where that buy is there. So that's target. So if we get that move now, it's out. That's the reasoning behind the small targets. But obviously, when an ADR is hit and you don't get out and it fails, it just becomes a position trade like any other. And this is why some people don't like to trade the ADR reversal strategy, because if this now needs to turn into a position trade, look at where we are on the hourly. Yeah, so what you're doing is you're taking a first position and the RSI is nowhere near extended. So there is potential for this to drop quite a way before you get your first potential pullback start. So that's the downside to the ADR strategy, is if the scalps don't work, and they usually work within 1 to 2 days. I mean, if you look at the ADRs that we've got on at the moment, there's a few ADRs at the moment which are 3 positions. So these are all failed ADR reversals. 3 of those are on the New Zealand dollar. So there's a bit of overexposure on it there because it's taking every trade, and the Australian dollar. So these will all be pretty much off the same move. That's why you got Aussie CAD in there. You got pound odd, pound New Zealand yen, and euro New Zealand. Yes, it's all the New Zealand and the Australians, which we know has been like that. But then you look at the H1, and H1's got a couple of positions on those New Zealands as well, except the H1s have obviously got less, and they're in less drawdown because it got in when the RSI was extended. So some people, and somebody posted in the Telegram group a few last week, I think it was, they are running ADR reversals only when RSI is extended as well. So what you're saying is, get me in on an RSI extension below 30 and an ADR hit at the same time. So you've got the initial ADR entry is also on an extension. That's a much safer entry with a much more higher probability of a pullback and a successful bounce. Yeah, there's no right or wrong. You get in the market when you want to get in the market. You just deal with it after. Swiss yen ADR extended. So this Swissy is off today. It's a short exit there, look, from Friday's entry. ADR hit. I wouldn't get in the way of this. So this Swiss yen is probably the one I would say I'd be thinking twice about getting into that one today, because what we've got coming up later is potentially some news from Japan from this emergency meeting that they're having, and if they are going to come out and say we're not happy with, and this is what they often say, we're not happy with the way the FX market's going, they will intervene, and this thing will come down like a steam train, especially if you've got weak Swiss franc. If that's going to continue for a couple of days, that weak Swissy, and the yen powers up at the same time, this thing's going to be down here today. We'll see what happens. But yeah, so that is an ADR hit. But, you know, on its way down, potentially it's going to do that as well. So it's always an opportunity for a pullback. Which strategy you use for prop firm challenges? Opening range breakout. I've already answered that one. Yen strengths. Yeah, yen strength starting to come through. Hola. Aloha. Speak Hawaiian? No. Did I miss GJ? No, you haven't missed GJ. I just haven't done it. There's GJ. Nothing for me at the moment. It's just sideways. Last entry was there, and I decided to exit that one because it went sideways for 4 days. Good job it did. But if you're in it, you're probably in 135, 200, 67, 70, 140. You're probably in 2, maybe 3 positions, probably second there, maybe third there. So your average will be somewhere in that propulsion gap, I would imagine, or somewhere around here. ADR just not going anywhere at the moment, but if this yen rallies later off the news, that'll be coming down. Wear a parachute. Yeah. Yes. Morning, Neo. Don't think that's an option. Lee, explain me pullbacks. I'm not sure what you mean. Explain you pullbacks. Well, pullbacks basically are just market structure. I don't know what you mean, explain. That's a pullback. There you go. It's a pullback. It's where the price pushes and then it pulls back. I don't quite know what to say to that one, as you can tell. How do you feel about gold? Gold. We'll have a look at oil as well, actually. Right, gold. Come on, John, where are you? There you are. Gold. Still dropping. So the US basically is a bit of a mystery. So there was very... Let's actually go back to the news. So there was talk this weekend all over the place about the debt ceiling. And I can't scroll back any further. So the debt ceiling, they have decided to move. So 29th. Yeah, there we go. So what it looks like is that's our debt ceiling. We're about to default on it. Okay, we'll move it up. All right, brilliant. Hang on a minute. We're now in August. We're about to hit it again. All right, no problem. Just move it up. Yeah. And it's what the Fed does, isn't it? We're going to run out of money. Well, print some more. All right, we're going to run out of money, so print some more. Run out of money. Print some more money. So at the moment, they're just getting themselves into more debt. It's like saying, basically, I've maxed out my credit card. What shall I do? Oh, I know. Let's get another credit card. That's a good thing to do. What should I do? I'll pay off that credit card with that credit card and move it all over to there. Hang on a minute. That doesn't help us, does it? So the Fed have basically just stalled the inevitable, which means potentially that we're not going to get potentially weakness in the US dollar over the next few weeks. So if we're going to get strength in the US dollar, gold's coming down, and it certainly obviously has made a move in that direction. So we're at new lows basically. So we've managed to break out of the range that we were in, and it's looking like it's going to come back down and fill all this propulsion over the next week or so. So there is this level here potentially, which is what was looking like it was going to be a range, and then they slammed through it, tested it, and rallied again. There you go. That's a pullback. Yeah, we tend to pull back into previous resistance, which turns into support. So that's potentially what I see, is some strength in the US dollar. However, at any point, we could have something negative come out about this debt ceiling and the fact that they keep changing it. And they keep saying they're going to increase their interest rates again after they said they weren't. It's just impossible to give any direction on the US dollar at the minute. And obviously the gold is just the US dollar cross. So it hasn't got its own real strength or weakness at the moment, because there's a real restriction in gold movement because of the Russian conflict. So it's whatever the US dollar is doing inverse. I have no clue what the US dollar is going to do over the next few weeks. It's impossible to tell. Everything's in such a mess. Could go up, could go down. As you can see, for the last sort of 2 weeks or so, it really doesn't matter whether you've gone long or short. If you've gone long at any point, you've had an exit. If you've gone short at any point, you've had an exit. So if you've gone long there and you've gone long there, you would have had potentially an exit out of there, or still be in it maybe. I don't know. But it's moving nicely up and down. However, it's doing that thing that gold does, which is why I don't trade it. It goes quiet, and then goes mental, and then goes quiet, then it goes mental. Yeah, and this is why I don't position trade gold, because it just does that all the time. It's just violent. When it moves violently, because usually what you've got is no movement whatsoever on the cross and huge movement on the currency. The reason we get different differentiating strengths and weaknesses across different currencies. So like at the moment, the Swiss franc is pushing today, yeah? So we got a big, strong move on the Swiss franc, not hit ADR there. Swiss yen has hit ADR there. Euro Swiss is kind of sitting in the middle. So there's 3 different currencies there. One of them's topped up there, one of them's down there, and one of them's gone up and down a little bit, hasn't done a lot. The reason being is because this has its own strength, this has its own strength, and all the other currencies do. Gold doesn't have its own strength unless there's a lot of gold purchasing going on, which doesn't happen very often. So when you get a US dollar strength or weakness, that is basically what it does, because this thing doesn't have any input on the movement. Same with silver, platinum, and all the other things that are crossed with gold. So it's just inverse of US dollar movement at the minute, which we don't know. Oil, same thing. We're just sideways at the minute. So it is looking like it's bullish. We did have a crack at that high into this propulsion, and they sold it immediately as soon as they got back into that propulsion gap. So the guys that started that move there resold it. We are finding the bulls fighting back though. So very difficult on oil. It's all forecast to be long. It's all forecast to go up. It's just not able to get any legs. So it's what, 3 weeks now roughly, isn't it? Yeah, back to the beginning of May. So we entered this range on the 4th of May. We're still there. Can't get any progress, but bullish is the forecast. So gold's got loads of upside targets now, though. Look, you're stuck between a rock and a hard place, aren't you? There's loads of reasons for it to do that. There's loads of reasons for it to do that. Just not fun. Not fun. Too squeezy. Live stream from the plane. I don't think I got the bandwidth up, but however many thousand feet I'm going to be. Handshake deal vote on Wednesday. Yeah, so there was did see something in here about something else happening. So just need to keep our eyes peeled on the news, basically, just to see what's going on. There we go. Debt ceiling, debt deal brings relief to coupled. Debt deal brings relief to coupled with caution. Biden and the House Speaker McCarthy both expressed optimism that their agreement will be approved by Congress, even if politicians reach an agreement before the US government runs out of funds in about a week. Traders would face a slew of challenges ranging from the possibility of another Federal Reserve rate hike to a flood of bond issuance from the US Treasury Department. So it's all, hiking rates, bullish. It's all talk all the time. It's all talk. We just never know what's going to happen until it's happened with the US at the moment, which is why we're getting all this movement. If you look at the US dollar index, which is the Euro US dollar upside down, you can see what the market thinks at the moment. It literally hasn't got a clue. So all we're doing is we're just sitting in this holding pattern at the moment, just waiting for some real guidance as to whether or not we've hit this peak interest rate. At the moment, there is just there's no real confirmation that we are stopping interest rate rises. And until that happens, we have to assume that they are going to continue to do that. But because we're so close to it being that, the market doesn't want to put too much money into the US dollar. So what we're getting is just nothing at the moment. And it's kind of what we had. It's the inverse of what we had previously. So we will start a big move against the US dollar at some point, which means that everything is going to basically do that, everything against the US dollar. It's just a case of timing, and the Fed just do not want it to happen, obviously, at the moment, because they're in massive financial crisis. So mixed messages. But mixed messages for us are good. So you can see here on this one, for example, on the Euro US dollar, it's been coming down quite dramatically. There's a long trade there. There's a long trade there. As long as they keep bringing it down, but they keep bringing it down in a nice orderly fashion with nice market structure, you can get in either direction on it. It doesn't matter. As long as it moves up and down constantly on wherever it's going, we're in and out, aren't we? So, DAX has broken the upside. So your opening range breakout 5-minute on the DAX to the downside failed, and it's flipped long. So upside potential today for the DAX is sky's the limit, really. So we're looking at ADR, which is yesterday's high. So that's where we're going to find our first resistance, which is obviously this level here. Around about that level there. So it's ADR basically is that level. That's yesterday's high, ADR, and that previous low, which is where you're going to find some orders short. That is assuming obviously it wants to go on a trend day. If it's just going to go into rotation, I'm just going to do that all down, and you can't make any money when it does that, unless you know exactly where to sell the highs, which is hard. Right, that's it. That's everything covered on that side of things. ADRs, we've got a few of those obviously playing out at the moment. They're all Swiss franc related apart from the Aussie US. So it's the Swiss yen, which has already gone. So there's your reverse alert on the Swiss yen. Literally just triggered. So there you go. So a third of an ADR from that is 98, which is 32.5 pips. So you'd be looking for a pullback up into there. Yeah. So this is what I mean when I was talking about the 50% thing. If you put a fib on the move, and assume you're going to get roughly a 50% retracement. On a normal market structure move, you're going to get roughly a 50% retracement. Strong would be a 38% bounce. Weak would be somewhere between 61.8 to 71.9. So if you look at 50 being sort of the average, the idea being is by the time you get the reversal alert, you have missed that much of the move. So if you target half an ADR from there, you need to be up here. If you target a third of an ADR, you can get out if it's just a 50% retracement. So it just puts the odds a little bit more in your favor. Why I use a third rather than a half. But half an ADR is still good. You know, if you want to be super conservative, just go for a quarter of an ADR. Just scalp. You're not using a stop loss. Risk reward doesn't matter, does it? You're just looking to get out with profit. So if you are using a stop loss, obviously, then you do need to consider the size of the reversal alert. That's your main factor, is how big is that? Can I get a 1.5 hour out of it? That's your main deciding factor if you're using a stop loss has always got to be, can I get a 1.5 hour out of it? And a 1.5 hour is there, which is, in this case, 30 pips, which is a third of an ADR. Same thing. Brian, Fidel got me over the weekend. Fidel got you? After paying all that attention to detail, they've failed my account on a technicality. Wave if you fly over your house. Okay, Steve. Where do you live? I won't know where your house is. 30-day period to close all trades was on the 28th. When I went too close, my trades on Sunday, they were already on the 29th. Broker is 7 hours ahead of me. What do you mean 30-day period to close all trades? What's that mean? Didn't even know there was a rule you had to close your trades within 30 days. Why do you have to close your trades within 30 days? What, to get paid? I guess. Sounds a bit. I suppose if you're. Oh, right. So they haven't got you. Basically, you're just not going to get paid because you didn't have your closed trades. So if you're in profit, just close them now and then wait. Start another evaluation, maybe. There's these rules. This is why my Forex funds is just, I just can't. Doesn't matter how good another firm looks. There's always something somewhere that gets you in some way, shape, or form. There's always a stumbling block. Can't close. Get the synth of death when I try. So they've frozen your account. So what have they done? Failed your funded account because you didn't close your trades. Is that in the contract? You have to do that. If so, then they've got you. Yeah. There you go. So Feudal Crest are just a pain in the ass. Don't use them. I'd argue that. But yeah, I mean, they seem to have some very funny rules, don't they? Very funny rules. That is a weird one. Not heard that before. Yeah. Got to read those contracts with these prop firms. They are so annoying sometimes. I got caught. What did I get caught out on? On Apex is one, yeah. Apex is like rule. You don't, until you reread the contract. The first time you know you've got something wrong is when you go for your pay. You go, pay me please, and they go, no. You go, why? Well, because you haven't got enough profit in your account. What do you mean I haven't got enough profit in your account? Read term okay. And then over the next period of months, you blow it before you get to the payday. And then you get to another payday and you go, can I have my 3,000, please? I've done everything you wanted to. And they go, no, you can only have 1,000 of it. Why? It's in your contract. You only get 1,000 for 3 months. Okay, give me 1,000. There's always something. Dax, was that profit take? Possibly. Yeah. So if you took the long on that entry that we said about there, remember I said that would be your potential target. A bit higher than that. Pulling back. I can never answer that question, Virginia. I don't know what that is. Nobody knows what this is. This is one of two things. This is either a double bottom bounce, market structure long, and this is a pullback, profit take on that move, and then they're going to put a second leg in from this propulsion gap up to here. Or this is a rotation day, and you're just going to do that. And when you've identified it's a rotation day, the next time you try and play that range high short, it will fly out the high and stop you out. You never know what's going to happen when you're trying to scalp. This is the problem with scalping. It will drive you mental because it doesn't matter how many times your setup works, it will fail for the next 2 days. And you'll be like, oh, it doesn't work. No, it does work. It's just it fails for 2 days. But you won't be able to psychologically get through that. Every time you see this pullback into propulsion and bounce, you'll take that and it will work 4 times. And then it will fail 6 times and you'll be like, oh, it doesn't work. But you'll have lost 4R and you'll have made 6, 8R. But you won't remember the 8R. All you'll do is remember the 4R because that's what happened most recently. It's one or the other, isn't it? There's your low. There's your high. There's your higher low. Off we go. Or there's your run up at the shorts and there's your 50% pullback on the next leg down. I can guarantee, this is the thing, people, you know, whenever I say stuff, I make it sound really easy because it is. There is only 2 things that are going to happen. It's either going to break out of that low or that high. Guarantee it. So there is only 2 things happening now. Either that is today's peak formation low and we're on a pullback long to come and test the high, or we are pulling back on a short. I can guarantee with 100% accuracy one of those 2 things is happening. I just don't know which it is. So your job is to take one of those options with a risk-reward ratio that makes you a positive return. That is its simplest form. That's what trading is. I don't know what it is going to be. It's going to be that, or it's going to be that. Is that a profit take? Possibly. Or it's the start of... So, okay, the answer to your question, actually, if you think about it, is yes, it is a profit take. 100% guaranteed it's a profit take. It's either the end of the profit take on that, the start of the second impulse leg, or it is a profit take on that move and the start of the second impulse leg. Is that helpful? No. Sorry, I can't be more helpful. I just don't know how to read the future. I've got an image for that. Right. That's all I've got for you today. Nothing else to really look at until this afternoon. So we've got no news at the minute. We're waiting for... basically, we're waiting for tomorrow. So we've got CB consumer confidence this afternoon at 3 o'clock after market open. I get the feeling we'll probably see a fairly decent amount of volatility off the open. So I don't think the market's going to hang around for that today. I think we'll probably just get a really nice big move. But we may do. I don't know. We'll see what happens. Watch the Globex session basically for the US indices today to give some clues. Euro pounds just hit RSI. So we just tapped up into that high on the NASDAQ. Fair bit of movement, actually. So it might be a case of we've put in a fair bit of movement before we get the open, and then obviously we have a flat open until the news. So just wait and see. But that's all the news we've got today. There's nothing else really to move the market today. Obviously, it's just going to move however it wants to move today off yesterday's bank holiday. So I would imagine there's going to be a fair bit of movement. Whether or not there's enough to power it through ADRs and stuff, we'll have to wait and see. But that's your main news tomorrow. We're waiting for this. This is going to be the it's the only CPI figure we've got. It's the only important figure we've got apart from unemployment rates for the US. So that's your big one tomorrow. So we'll wait and see what happens on that. Just got some RSIs light up, didn't we, on the hourly? So all the RSIs we had before are still there. The only thing new we've had come in is that euro pound. So that's now an RSI extension to the downside. Just below the 30. Versatile hasn't triggered yet. So if you're trading the 30 RSI on the hourly H1 M5 mean reversion, you'll be getting a long entry there. If you're like me and you're trading 25s, more aggressive, more conservative entries, not an entry. Really nice double bottom bounce. So the limit orders have triggered very nicely there. Look, a lot of buying coming off that low. So a lot of upside targets as well. And it's rangy as hell at the moment. So good looking long. You know, a lot of people will be taking this with a stop under there. And it will either work or it won't. And if it does work, that's a massive risk reward. Look. Beautiful risk reward trade. You know, if we come back up and retest any of these range highs up here, you're looking at 7-hour return on that. Obviously, it's going to take a day or two, but nice looking trade. Maybe, maybe not. If it's going to break to the downside, you've got to go back. Fair old way to find some support, haven't you? Somewhere around here, which is pretty much 250 to 300 ADR. We're bouncing off of here look, at the moment. So this is potentially the old support bounce here. And as I say, we are expecting euro strength, so, but we are also expecting pound strength. What's the dashboard? What's the bias scorecard say about this? Let's have a look. Euro pound range bound sideways. There's no cot advantage. Retail at the moment are all longing it, so it's a short. But no advantage either way on the euro pound. Fundamentally, it's sideways. Good opportunity for a bounce play though. It's either going to bounce or it's not. If it does bounce, you've got a 7-hour return. If it doesn't bounce, obviously you just get stopped out. Right, I'll leave it there today. So I'll be back this afternoon at 2:20. Fingers crossed, assuming everything goes okay with the flight and everything. Yeah, I'll see you guys this afternoon. I've got time this morning to get the new version of the EA copied over onto this. So I'm just going to get this reset up again with the new version of the 5-minute pre-market Breakout EA, so I can test it again on these live testing. So it's thrown up a few curveballs, this live testing, with ranges basically and slippage. Slippage is the main problem. So might do some testing on the 1-minute chart and see if we can put some way to get around a little bit of this slippage. I need to have a think about that. Right, have a good one. I'll be back this afternoon, 2:20. Back tomorrow morning, 7:50, same time. If you need anything, I'll be in the Telegram group as usual. But other than that, we're just waiting for everything to play out. So just sit tight and, yeah, wait, basically. Banked some this morning, look. So, yeah, New Zealand. Strength. Let's go. Right, have a good one. I'll see you guys later. If not, tomorrow morning. And I'll be in the Telegram. Have a good day.